welcome back to another episode of the Global Interview Series. I'm your host Sunlight, and today I'm delighted to welcome onto the show Mona Tiesler, Investment Manager at Tokentus Investments. So welcome Mona to the show.
Thank you.
Thank you. So let's jump right into things.
The Globe mobile app is now live on the Apple App Store. Trade anytime, anywhere, with any asset as collateral. Stay connected with all your positions on the go. Globe, exchange everything, now even easier.
Can you tell us a bit about yourself and how you got into crypto investments?
Yeah, I'd love to. So essentially, my very first contact with Bitcoin was actually in 2013. I was still at university and I was organizing as part of a group events and conferences for the university students. And we decided to do a kind of digital asset / Bitcoin conference for the students back in 2013. And we had some very excited investors that came in and basically said, you know, Bitcoin's going to be the future. And back then, I have to say, a lot of skepticism was the main reaction to that statement and to that conference. And I wasn't brave enough right after university to go into crypto or blockchain directly because it seemed like the skepticism kind of won over my gut feeling that this is a very interesting currency trajectory for the future. So I went into consulting and I did 4 years of strategic consulting in London. And then I actually went back to Germany, where I'm originally from. And I founded the German entity of an education technology startup. And I built that entity and that market before I actually did an MBA at INSEAD University. So I got to go to Singapore, really loved it, did an internship in venture capital there during my time at INSEAD, and also founded another startup in the food technology space. Nothing to do with blockchain or crypto at all. But after my MBA, I was like, okay, actually, I've tried so many different things, and I always keep coming back to this one thing that I heard about at university, which was cryptocurrencies, blockchain technology, and a little bit of this banking the unbanked, because that was something that really resonated with moral values, because I believe everybody should have equal opportunities. And then I went into crypto after my MBA, went first to work for a crypto neobank in Berlin, and then went into investing and actually became a venture capital investor, the job that I'm doing now for Tokentus, and I'm super happy with that choice.
Amazing. So you've got a lot going on. How do you kind of juggle everything? So are you still dealing with your startups and also being investment manager?
Yes. So basically, I think it's all about being able to structure your day really well, and just that's the German in me, I guess. Being able to just kind of really make a plan and stick to it, and that's something that I'm very, it's very important to me. And my main job and focus is definitely Tokentus, my investment manager role. That's what I do full time, and I really love it. And on the weekends, I am still helping and advising the startups as they're still growing. And the edtech startup is now a unicorn, but obviously not run by me, but the central entity. And Timely, the food tech startup, is still running in the background, again, not run by me, just more as an advisor and a support to my co-founder. But it's still close to my heart, and I want to help them. But my real passion and my full-time commitment is definitely with the blockchain and crypto space.
Amazing. So could you tell us a bit about Tokentus?
Yeah, I'd love to. So Tokentus is a publicly listed venture capital fund based out of Frankfurt, Germany. We are listed on all the German stock exchanges, including the Xetra, and it's a pure Web3 blockchain-focused venture capital fund. So we don't do any liquid trading, but we invest in companies that are in the Web3 space. So we are publicly listed because essentially we have very interesting shareholders from the German banking network that are essentially also able to provide, or we are able to provide, phenomenal opportunities into the German institutional network, banking network, help with regulatory aspects, which I think to a lot of Web3 startups, it's really, really valuable. So we often co-invest with very large VCs in America or Asia or the UK, and our value add is really this network into the German market. And we have some really, really cool companies, about 16 investments to date. And it's a very interesting journey.
Amazing. So you say 16 investments to date. From when?
Yeah, good question. So Tokentus was originally founded in 2019. Yeah, so it's been around. My colleague Benedict and the fund CEO Oliver, they were building it from the beginning, and I joined a bit later as an investment manager to support the growth of the companies and, of course, bring in more new investments.
Lovely. So you mentioned Tokentus being a publicly listed VC. So what's the advantage of that as opposed to being an LLC, or I suppose in Germany's case, a GmbH, right?
Yeah, exactly. So the reason why we became publicly listed is also because it gives us more flexibility, and it allows our shareholders, or LPs if it was a traditional fund, to be able to exit at any point that they like, so they have a lot of flexibility. And of course, it just gives everyone the opportunity to invest and buy some shares. Everyone can do that immediately for a few euros and just see where it goes, participate in a venture capital like multiple over time, which I think is really interesting, really an opportunity for everyone. But also, of course, it gives us flexibility as we invest from our balance sheet. So it gives us flexibilities in our investments. We can act very fast after very diligent due diligence, but we can still act very fast if we think there's a good investment that we need to embrace with a quicker turnaround time. So we have quite a lot of advantages that way. And of course, it gives us and our shareholders and everyone in the market actually very much transparency, because we have to do obviously very diligent reporting. Our website, you can see exactly what we invested when, how much, at what valuation, if we are allowed to disclose. So all these things, I think, just give a bit of peace of mind as well to some of the investors, and also to other startups that are looking at us to be investors in them, because we're very transparent with everything we do.
That's amazing. So could you actually tell me a bit more about what type of Web3 companies that Tokentus is investing in?
Yeah, absolutely. So we are really mainly looking at what I call infrastructure. Now you're going to get a lot of different definitions for this. So I would say it's not just layer ones or deep technology aspects of the blockchain space, but it's also, for example, companies that help with data management or stakeholder management or community management. Or we have, for example, a company in our portfolio, Onera, which is essentially, I always like to describe it like the SWIFT network of the Web3 space, because it allows the transfer and exchange of tokenized assets across different blockchains. And is mainly working with institutions, large banks, or private equity funds, or real estate companies, in order to allow the buying and selling of tokenized assets, which is quite interesting, because essentially you can really see a little bit of that, what we're used to with normal banking. If you bank with Goldman and I bank with JP, we can still easily do a bank transfer, and it's done through the SWIFT network very easily. And Onera is providing that, for example, for the tokenized assets world, which I believe is strongly emerging. So that's for example, what I also would consider infrastructure. We also have invested in Credo, which is probably, I hope they don't mind me saying this, but a very easy way to describe it is like a decentralized fire blocks.
We actually had them on the show earlier.
There you go. So you know all about it already when you saw the last episodes. But in BCB Group, a white label banking solutions for all crypto or Web3 companies. So you get the feeling a little bit about what our type of investment looks like. But I think we're getting quite flexible, because I think the most important aspect is, do we have a value add, right? We don't really do gaming, NFTs, we don't invest directly in coins because we don't have a value add there. We have an amazing network, very, very strong connections across Germany, specifically in the banking network. So that is what we can provide, and it's a hugely unique value proposition to the companies in our portfolio. And a lot of the gaming or NFT or maybe even more creator economy focused Web3 startups, they might not have so much value add from that. So that's why we also do fund-of-fund investments into, for example, Gumi Cryptos based in San Francisco, who are very focused and very good with, for example, gaming related startups. So we kind of have a little bit of an extension arm through our investment into their fund.
Oh, wow, so you've got your kind of hands in a lot of pies.
yes, to diversify, and just, I do think there's a lot of, you need to be careful and not just sell money to startups. I think you should also sell expertise and network and the ability to help them grow. And if we're not really able to do that with who we are, and we're a very small team, then maybe we're not the right investor for some startups. And I think that's where we also make a distinction that's hopefully also valuable to the startups that come speak to us.
So you mentioned you have the value add of your extensive banking network. Could you expand a bit more on your value add?
Yeah, absolutely. So in general, I would say that we are, quite active. So reaching out to the founders that we work with, ask them how are they doing, right? Also right now with the market not being the most rosy, making sure that they're okay and understanding the issues, understanding where are the roadblocks, right? For example, hiring. Hiring is a big problem for a lot of startups because there's a shortage of talent or even maybe access to talent. So we could, for example, help with either our network or recruiter networks we have, or we can help with developers that we know are good, right? So it's a little bit about making connections and bringing value to the startups depending on what they need. So I don't think we should, and we are or ever will, be the kind of investors that are on the founder's toes all the time and want a report every week and need to be involved in every single detail, because I think that also takes away time from the founders where they could be building. But they should know that they can always reach out to us, and we do have that value add of being able to provide pretty great connections depending on whatever they need, right, for their next milestones.
Yeah, lovely. So, you're an investment manager at Tokentus. Could you talk us through a typical day, what that looks like, if there is one?
Yeah, I wish there was an easy answer to that one. Honestly, my days are all very different, but a few components that are part of my day, and I don't know if every investment manager would answer this the same way. I work quite independently, and I genuinely really love what I do. I really, really do. And so I find things to do no matter what. And they could be everything from research, so looking at the market, thinking about maybe if I currently am involved with something, for example, any kind of DeFi protocol, what are my pain points, right? And then researching the market. Does any startup at the moment look into that? What is their solution? Or researching more technical aspects, because I'm not a computer scientist, so I have a lot to learn, right? So researching more the technical aspects, the new technologies, the buzzwords, right? What do they actually mean, and how are different startups working around prominent issues in the industry? So that's one part. The other part is talking to people, reaching out to co-investors, discussing deals, discussing market trends, discussing issues and solutions. Then also speaking to startups, so a lot of meetings, speaking to different startups, having them pitch, asking questions, trying to understand, and also for them to understand our value add. So that's obviously a lot of time for meetings, for speaking and learning. And then definitely I do a lot of conferences. So I go to many different blockchain conferences around the world, together with my colleague a lot of the time, and we look at the different talks, the different networking events, the different meetings with different stakeholders across the network, and that can be 2-3 weeks of go, and every day just being involved in the community in so many different ways. And that's obviously also a very different day to an office day. And also in the evenings, go to meetups, learn, talk to people, educate yourself, and try to educate others, is what I genuinely say is the essence of what makes up my typical days.
Yeah, so that was a very varied answer.
Yeah.
They're definitely not your typical 9 to 5, right?
No, definitely not. I don't remember the last time I worked 9 to 5 ever, really.
So before we were rolling, actually, so I did ask you about how at conferences you do meet all these different types of people. So how do you kind of discern who's worth, spending more time with? And
yeah, one of the things I think is quite important to say with regards to the word worth, I think at the moment, to me, everyone is worth spending time with, because yes, I don't have unlimited hours in the day, and maybe I also do sometimes not push back, and that's obviously also means I work a lot, but I think have been very, very few times where I've spoken to someone and I didn't actually think that they have a massive value add for me and I might have a value add for them. And I have it's almost like a database in my head when I speak to someone and I know they're looking for that or they need this, and then the other person I speak to says, oh, they're looking for that and then they need this. I sometimes think, okay, I can connect these two people. And then I set up a Telegram group. I ask them, of course, if they want to. And then if they say both yes, then I connect them. And that's probably no massive value add for me, but it is a potential value add for the community, for the overall blockchain space, because maybe this can come to a collaboration between those two parties that will help both their projects grow or an investment to occur or whatever it may be. So I genuinely think everybody I speak to is worth speaking to. Sometimes I do get approached with very salesy pitches, very persistent salesy pitches that are maybe a little bit, difficult, because sometimes when you say no and you say it friendly, I think then it's also time to maybe leave that person alone. But to maybe be a little bit more precise, I say when I speak to a startup again after I meet them at a conference, for another, Zoom meeting, for example, or face-to-face if they're also in London, then I think that's because I believe that their project fits to our investment thesis, and I believe the team is very interesting. I enjoyed the conversation with them. I think we could have a value add as a venture capital fund for them, and that's kind of what I base, further conversations on. And obviously with co-investors, or other venture capital funds, I really enjoy meeting them again and speaking to them again, because what I mentioned earlier, trends, investments, who is raising, maybe from their portfolio versus our portfolio, that's really good knowledge sharing that I like to foster as well.
So obviously these past few weeks have been a bit tumultuous. So how has Tokentus fared so far?
Luckily, very well. We don't have any exposure to FTX or any subsidiaries or affected companies due to this situation. So we are very lucky in that respect. And so far our portfolio companies have also not had any direct hit or were invested in by Alameda or FTX. So again, in that respect, I count us and our portfolio very lucky. I would say the bigger issue, or what we are feeling, is that the market in general, and maybe not as educated people out there, they have a negative sentiment towards the whole blockchain space or the Web3 space. And I think that that's really the biggest problem I see. Maybe not directly felt impact at this point, but generally I believe that this collapse and the strong negative domino effect that this is and will be causing is pushing the industry back 2 years or so. And these 2 years we've worked very hard, we've educated, we've onboarded people, we've created solutions that are bringing so much efficiency and value to the world, to the future, and a lot of this is overshadowed now. And that's what I think is where everyone in this space will feel the negative effects, and that's very frustrating, to be honest.
Exactly. So is Tokentus doing anything to kind of help the community out after this fallout?
Essentially, I mean, what we are definitely doing is speaking to our portfolio companies, speaking to our network, and understanding if there has been something that occurred that has caused a negative effect on their success, on their possibilities to grow. And we then try to help, right? No matter what it may be, speak to people, use our network to try to find solutions with them. And I think that's maybe on the immediate surroundings, but on the outward, maybe more bigger picture, to answer that question is, at least from my end, and I don't want to speak for my colleagues because, I think they can speak for themselves, but on my end, I really try to educate and have an opinion and just say on social media, Twitter, my Instagram, being here, for example, things like that, just saying, please be understanding and aware of the fact that FTX and Alameda Research were centralized exchanges, and they were basing what they were doing on the traditional financial system, and they were not essentially using the blockchain technology in the sense of transparency and not being able to use customer funds in fraudulent ways, but actually fully transparently being able to, exchange money on a decentralized exchange, for example, or receive interest yields on a decentralized exchange. It's a very different thing. And I think the Web3 space and the community and what we're trying to achieve and what we're trying to educate on is that it's built on decentralization. It's built on not having one person as the figurehead that can do something like this and deceive millions of people because of loopholes that are not reported or are not seen because it's done behind closed doors. This industry is essentially why I'm so passionate about the Web3 space, is because decentralization allows us to be able to show that we are essentially not hiding anything, but that projects are transparent. You know what happens with your money. You can make your own decisions, and it's built on merit and certain common understanding that cannot be altered with, or so much fraud cannot occur. I understand we have a long way to go because there are hacks, because we're still storming and norming and trying to figure out where this can go. We need regulation, like good regulation, actually thought through regulation, and not regulation built on fear, but regulation built on opportunity in order to bring this society, this community, this future technology forward. But we need to, I think we're set back, and I think I used to always say we need another 5 years. Now maybe we need another 7 years or so. But I think it's important to understand that FTX and what has happened there and what the leadership of that company or companies has done is not the equivalent to what the blockchain space stands for.
No, absolutely. I agree. So that being said, do you have any predictions on what will come of Alameda research and FTX?
Well, I mean, they have obviously filed for bankruptcy, and I think that there's going to be a big knock-on effect, right? A domino effect that I've mentioned earlier, and I think we probably know this much, and there's probably a lot more that we don't know that will affect a lot of projects, funds, future developments, sometimes in a positive way, because maybe regulators are waking up to try to figure out how to manage this space better, and sometimes negative, because companies might still follow on with becoming insolvent because they had too much exposure, and that could, of course, that causes a negative effect of this. So I think sadly this is not over in my opinion. I think we're going to see ripple effects coming. And why do I think that? Well, I would say very simply, if we saw the Terra Luna collapse, these are still ripple effects of that collapse, and we're still feeling them. And FTX is a very, very, very large player, or was a very large player in this space, that was a venture capitalist, a market maker, well, Alameda and FTX, and in general, I mean, we all know it was an exchange. We got so many things that it was, and this is now, they had their fingers in a lot of pies, and we're going to see some of those pies maybe, go bad, which is not ideal, but I'm bracing myself for more to come.
So I was speaking to a few people, and some of them are saying, you know what, in hindsight it was very obvious what would happen. Were you shocked at all?
Honestly, yes, I was shocked. I think in hindsight you can always say it was obvious, right? And yes, I agree, right? I agree, there were definitely a lot of warning signs that we probably should have seen and questioned, but on the other hand, I felt like it's almost like when a snowball starts rolling, you have to very actively throw yourself in front of it or catch it in order to not make it into a massive ball of snow, rather than having that tiny little thing that's started from the top of the hill. And I think once it's rolling, it takes quite a lot for someone to actively stop it, and no one did really, right? And that's why I think it's quite hard to say, oh, it was obvious and we all saw it, because why did no one stop it then, right? Earlier, before so much damage was done. So yes, I was shocked, and I still am shocked, and I do think though what we all should be doing is maybe write out a clear list. I love lists. Write out a clear list of like, what were the warning signs? What was the problem? What did we not see? What did we just close an eye on, to be maybe able to help this situation not happen in the future, because we are actually looking for the red flags from projects like that.
Okay, so it's interesting you bring up the point of red flags. So off the top of your head, what can you think of that were red flags in that whole situation?
Yeah, I think firstly, we have this figurehead, right? We had it with Do Kwon for Terra Luna, and again now we have it with SBF for FTX. And this is a relatively young individual when he started, and somebody who was very outspoken, very much in the media, really a figurehead, called the savior of crypto or the king or whatever. And maybe that's something to just be aware of, is that also looking at who is the leadership of companies that make that much money, right? Because the lady Caroline, I believe that was also leadership of Alameda Research. Who is that person? Are those figureheads, are those leaders really equipped for those roles when the company grows so fast and so big? And if they are, then do they also have advisors, people within their leadership team that bring different perspectives, that have different experiences, maybe more experiences, have led or have been part of large companies with so much responsibility before, and can they provide some insights, some checks and balances, a sparings partner to younger leaders in the space? So I think that's maybe one thing, because in the end, this is a centralized company again, and it's led by people. So maybe who are these people, and are they the best equipped to make these decisions? And I think that's maybe one part that we should be aware of and that we should look at, and maybe not glorify individuals in a sense that we believe everything they say, because they are very good at speaking and are very interesting individuals. Because I think that has led to now 2 companies with very strong figureheads collapsing dramatically. Secondly, also, how is this company making so much money, right? With Terra Luna, we also saw Anchor Protocol 20% yield on a stablecoin, an algorithmic stablecoin. How is that possible, right? What is the mechanism behind this? How is this a long-term sustainable possibility? And the same with now FTX. We made so much money. They made so much money. There was so much growth. How are customers receiving high yields? Same with Celsius, right? How is this possible from just a pure standpoint of money flows? And how, I think we need to understand a little bit more the mechanism behind it and ask the question, how is that possible? And not just believe that, these are clever people, they're gonna do everything right, because I wish that was the case, but it doesn't seem like that. And then thirdly, also around the regulatory aspects, right? A company incorporated in the Bahamas, what jurisdiction is it basing its practices on, if it's centralized? What are the regulations in place? What are the loopholes, right, that we've now found? Can you build in backdoors, like we've read that have been done by FTX, in order to move money between companies? Is that allowed? Can you do that? And can you defraud your customers? And if how? Now we know a few points about how that was done within FTX. So I think understanding those points and just asking the question and double checking proof of reserves and liabilities of these centralized exchanges, to make sure that we actually understand if this company is really doing what it says it's doing, or if it's doing something with the funds that no one knows about that can lead to collapses that are as dramatic as this within days.
Yeah, absolutely. And here's to hoping that people will learn from past mistakes, right?
Yeah, I agree.
So, what are the next steps for Tokentus then?
Yeah, so I think luckily we knock on wood, haven't really had felt the hit of FTX that much, and I feel genuinely very, very sorry for all those who have. I know it's a really tough time for a lot of people, and I do feel that. But for us, we are still deploying. We are still looking for phenomenal founders, phenomenal ideas, tech, and companies to invest in. And I believe we will continue with our investment thesis, with our momentum, just as we were before. But I think we also need to write that list of checks and balances. We also need to understand what has caused the falls. And for full transparency, we were investors in Celsius. So we have had our fair share of negative knock-on effects of collapses within the industry. So we also need to be aware that we need to ask more questions, understand the underlying mechanisms behind who we invest in better. And I think that that's something that we should change in our process. But overall, in the general process or steps that we're taking in the future are really keep on looking for the best companies, the best founders, and providing the most value we can to them.
Amazing, thank you. Thank you so much for watching, everyone. And if you enjoyed the content, don't forget to give us a like, comment, and subscribe. So thank you so much, Mona. And I'll see you next time, guys. Thank you.